You're an expert in stocks, but you're a professor expert in this bond market as well. And if we're going to do 50 in June and maybe a 50 basis point hike in July, what is stopping the Fed from just doing 100 now and getting it over with?
That's exactly what I would recommend. I think they should. They've already said, 50 in June, 50 in July. Given how bad the announcement was Friday, I think what Chairman Powell can do is bring that 50 forward. In other words, say, we're bringing that forward. I'm not going to commit now for another 50 July. We're going to look at how the data is going to be coming in. So he doesn't have to, claim that he's totally surprising the market. He's just bringing it forward. Maybe that's more palatable to him. He is so adverse, which I think is wrong, because when things are bad, you sometimes have to surprise the market. I think the market says, surprise me. It's almost saying, tell me you're really serious about a anti-inflationary program. And even though there might be an initial sell-off on 100 basis points, I think there'd be a subsequent rally because the Fed is finally getting hold of the narrative, which it certainly has lost over the last year.
I mean, the market currently pricing in big move from the Federal Reserve and potentially a spiral to recession. When you see such moves as a 3-year yield climbing 28 basis points, when you look across the curve and 10-year yields up 27 basis points, this is extraordinary. And the moves in terms of the stock market have equally been jaw-dropping, Jeremy. Are we getting to some sort of level where you feel some of the sell pressure eases off?
They're getting there. The market is anticipating. I think, the Fed funds December is at 3.30 right now. My feeling is the neutral Fed funds is not as high as they say, 2.4. I think it's between 1.5 and 2. They will be definitely above neutral. What they have to understand is that, the medicine does not work right away. I mean, monetary policy works with a lag of 12 months, 18 months. Well, I want them to surprise the market to get a hold of the narrative, but I don't want them so much to say, 100 today, 100 in July, we've got to get to 4 or 5, slam on the brakes, because I think we're going to all go through the windshield then, and we don't want to do that. It's going to take time. The mistakes of the Fed were made late in 2020 and 2021, particularly. That's got to work its way through the system. We still probably have another cumulative 8 to 10% to work through 2023, and they have to accept that. And get us there. Say you got the narrative, but you can't slam on the brakes so far as to say we're going to bring this economy to a stop to bring down inflation, because then you're going to crash equity prices, and you're going to bring unemployment very high. Accept the mistakes and what is going to be the consequences. Get a hold of the narrative. We now realize we should have done more. We're going to be moving forward. But again, as I have mentioned, money supply, which I've been talking about, as you know, for months, years actually, causing this inflation. Finally, over the last 3 months, we have gotten control of that money supply. That is the first step to controlling inflation.